Hey everyone, welcome and Happy New Year. Thank you so much for taking the time out of your day and joining us for our first installment of Optimize Your Vacation Rental, How to Stay Competitive in an Uncertain Market. This is the first of a planned webinar series where we as a company try to share all the tips and tricks that we use internally to the mass audience. And while we wait for everyone to join, we actually have a strong amount of registered attendees. I see a couple people still trickling in. I wanted to launch off with a quick poll. For everyone on this call, do you own a vacation rental? And if so, how are you currently managing it? You're going to see the poll right here on your screens, I believe, now. Oh, lots of answers coming in. Keep the poll running for about another 30 seconds. And as we continue to have attendees come in, just wanted to note, if you do have any questions throughout the webinar, please feel free to type in the chat box provided. If the time permits, I'll select a few to ask kind of throughout the conversation. Otherwise, we are going to be doing a full Q&A at the end, so stick around. Kevin, AvantStay is managing it. I love it. All right, it is 11:03 now. I'm going to end the poll. It looks like we have a pretty good split. Just in case you guys won't be able to see the results of the poll, it looks like we've got about a third with a national property management company, got another third that does not currently own a vacation rental, and then we've got the last third kind of split between a local PM or self-managing. So we truly got folks from all different parts of the audience here today. But Leslie, oh, we got the whole AvantStay owner crew joining in. Love to see it. Thank you. So wanted to start off with kind of like the background of this webinar and a little bit about us for those of you who aren't AvantStay owners. AvantStay is the, let me bring up the slides actually. So AvantStay is the largest private short-term rental property management company in the nation as of today. We have just over 1,500 properties in 60 plus cities under management. And really the driving thesis behind this webinar series is that, the short-term rental industry is still only like 10 years removed from being people, renting out their basements and their couches. And there's still a lot that hasn't been figured out and standardized in the industry. There's lots of information that's flying around, really hard to validate it. Lots of gaps and rounding errors that are really necessary to understand in order to maximize your revenue, especially in 2023. Now, some of you may have already seen the recent AirDNA 2023 report where they launched their forecast. And, 2022 was the first year where you're going to see that nights listed outstrip demand for the first time. And you're seeing 2023 kind of carry on much of the same. Not a huge increase in average daily rate. There's definitely going to be a competitive market. And what we've done is at AvantStay, we've invested very heavily in trying to professionalize the space. We've built in-house teams that are focused on revenue management, designs, listings, compliance, operational excellence, and innovation. And we would love to share this knowledge with you, which is what brings us to this chat on revenue management and largely finding ways to optimize your business. So now I just wanted to introduce our two speakers here today. With me, I have Holland, who is our Vice President of Sales, as well as Emre Ilgaz, who is the head of our revenue management team. Gentlemen, I'll let you two introduce yourselves. for the audience.
Thanks, Jeff. Appreciate it. Hey, everyone. Really excited to chat a little bit today. I'm Kent. As Jeff alluded to, I lead our pre-sale and post-sale teams on the go-to-market side, so sales, portfolio management, and I also support underwriting and revenue management. Emre, I'll hand it over to you to introduce yourself.
Hi, everyone. My name is Emre. I'm leading the revenue management team. Been here at AvantStay over the last 5 years and been dealing in the industry like all the ups and downs over the last 5 years. And very excited to chat more today.
Thank you, gentlemen. So let's dive right in, right? The title is, optimizing revenue in an uncertain market. Well, what about this market, just for the audience here, makes it so competitive and so uncertain? What is the current state of the market?
Thanks, Jeff. Yeah, I'll kick this one off. So the obvious, which I think everyone who's in the real estate space has been watching closely, is that we've seen interest rates double in the last 7 months, more than double in the last 6-7 months. And it's created a pretty unprecedented environment. We're on the price side as a result of the interest rates, seeing prices plateauing a little bit. Homes are trading less frequently. And a lot of buyers are having more difficulty obtaining preferential financing. On the flip side, the short-term rental demand remains really strong. The slide from AirDNA that you showed earlier, Jeff, I think highlights this pretty well, that we're seeing demand continue to increase. And so what it's doing is it's actually really making it so that investors can still get very strong returns from investing or holding in the homes that they've got. And if they can acquire, if folks can acquire at lower rates, that's going to only aid the return profile. But it's also just tangibly making it much more attractive for existing owners that have a second home or a vacation home or a portfolio to hold and rent that home rather than sell. And so I think one of the big driving forces behind what we're seeing from that perspective is that it's really pushing supply in the space to grow at rates that are pretty fast.
Mm-hmm. Emre, what are your thoughts on that?
Yeah, thanks, Jeff. So on the supply side, I think that's definitely a big change over there. Like, we are not in an environment anymore where we have seen like lack of supply second half of 2021. And since then, like, the industry grew a lot. Like the overall across the nation, like supply growing immensely, tremendously. And like, this is actually one example I wanted to pick, Scottsdale. Like, that's over the last year, like, in Scottsdale, supply grew like 50%. And if you look at other markets, like we are seeing the similar examples. Like if you look at Smoky Mountains, supply grew like 30% year over year. If you look at Joshua Tree, since January 2021, supply actually grew like 2.5x, like of compared to January 2021. So we are in an environment right now. The market is much more competitive than it used to be. So definitely, that's demand is growing. Supply is growing, and we need to look at like each market individually in order to adjust ourselves to this competitive environment.
Yeah, I think it's a great point, Emre. This is a great example, but to your point, we're seeing it across markets. I think the benefit of the supply growth coupled with demand growth is that it creates opportunity for homes that are well positioned and for strong revenue management and strong performance to still generate great returns. And so as this has happened, you've seen a trend towards owners and property management companies and really the industry becoming institutionalized, much more sophisticated. And I know we're going to talk about some of this today from a revenue management perspective, but when you look at the end-to-end process and management that is going on in the space now, it's almost unrecognizable from 2-3 years ago even. And so I think it does create this opportunity that there is this competitive market. I think those that are approaching it, and playing offense are able to actually still do quite well.
Yeah, and Ken, you actually brought up a good point. The institutionalization of the space brings to mind like a big topic I've been having recently with a lot of prospective owners or existing owners. The definition of revenue management itself is kind of in question. Like, what does revenue management really mean? Is it just pricing? Is it like Emre, could you define what RM is and why it's important?
Yeah, definitely. So as you mentioned, right, like revenue management always like goes hand to hand with pricing. We call dynamic pricing, like to be more fancier. But I actually want to give the book definition of revenue management, which is like selling the right home to the right customer at the right time via right channel for the right price. Like I love this definition because that's kind of explains pretty much summarize like the revenue management and like all the aspects of revenue management and how we can strategize. Like we focus on the last last word here, like for the right price, right? Like this is definitely the core focus of revenue management is definitely pricing, but this is not sufficient to optimize revenue. Like we need to have like a holistic strategy. The pricing needs to be supported with effective nightly minimum strategies, restriction strategies, with marketing, with listing optimization, channel optimization, and they all require like really strong understanding of market and booking trends. So yeah, that's kind of like briefly how I can summarize what is revenue management.
So it sounds like a by the book definition, but very nuanced if you kind of really look into it. I mean,
Yeah,
Ken, maybe
and
sorry.
I
Go
also
for it,
would
Emre.
like to add one more. Like we always have this debate, like whether revenue management is an art or is a data science. Like it's a combination of both. Like there's an art component of revenue management, which includes like subjectivity, right? Like especially in short-term rental industry, like we have homes like with really unique designs, unique features, like home with a ocean front, like with immense view. So there's this subjective, there's this creative approach, artistic approach, I would say, and that we can't leave behind. And but there's also like there's data science, definitely another big driver of revenue management. So we need to be making our decision based on data. We can't just lean on our subjective minds. We should justify and verify our decision and strategies through data.
I love that. An art and a science. And Ken, given that we have several of our own, portfolio owners here on the call, I'm sure they're very curious. What is kind of AvantStay's approach to revenue management? How do we drive strong performance with that mix of art and science?
Yeah, it's a great question. So if you think about what we're optimizing for, and it's in the name, revenue management, we're optimizing for revenue and income that we can secure on behalf of our owners and give back to owners so that they can make the most of their investments. Now, to simplify it, the two components that go into that are the average daily rate, which we call ADR, or occupancy. And so you've got these two things that you can trade off against. And a lot of times there's conversation about whether you should optimize for occupancy or optimize for higher daily rates. And the real answer is that when you think about it, you really are optimizing for both. And that's this concept of the revenue per available unit, or RevPAR, as we will call it, which is really the combination or the multiplication of ADR and occupancy. And so from a revenue management perspective, we're thinking about how do we balance those two and think very strategically and dynamically about what we're seeing play out in the market, where price points are, what the booking window is, and really making sure that we're thoughtful about the fact that in some cases, like in low season, it may make sense to actually think more about trying to drive occupancy where you have not as much pressure on price points, and a lot of homes actually sit vacant. So we're trying to make sure that we have renters in, provided that it makes sense to have renters at the price point that we have and we cover our costs. But in high season, it makes a little bit more sense to make sure that as we're thinking about RevPAR as the ultimate goal, that we actually are a little bit more aggressive on pricing. And there's an opportunity for us to capture where there's more pressure, more demand to capture higher ADRs. So it's a balance. I think to Emre's point, there's an art and a science there. The other piece I want to highlight, in addition to focusing on RevPAR as really the primary objective, we also increasingly are thinking about revenue management as a strategic function that needs to push the rest of the business. So, Emre's team, our revenue management team, owns delivering revenue in support of our owners. To do so, not only do they need to think about optimizing pricing and really understanding the numerical side, but we also lean on them to help support and really give insight into the qualitative side. Where do we have opportunities based on what we're seeing in the market for us to work with listings to improve the listing? or work with photography to go do a reshoot because we think the photos were taken at the wrong time of day, or maybe don't highlight some of the amenities that we want to have highlighted in the way that we think they should. And so, for us, it's a transition or transformation that we've seen over the last, probably 6 to 9 months in revenue management, really becoming a much more strategic function as well, that has helped drive strong rental performance by really surfacing opportunities for improvement across the organization as well.
Love it, Tian. And I think that really encapsulates the general strategy. But on the flip side, a lot of people on this call are local homeowners or people that are self-managing. Emre, what are some specific tactics that we use at AvantStay that we can share with the audience?
Yeah, sure. I love how you worded, Kent, about the RevPAR. I think that's definitely part of the summary and all the main strategy there. We need to look at every day different, right? Every day has different demand in a month. We cannot look at whole month of December as a whole. There are going to be, actually, I love December example. It's a great one because first half of the month is the slowest demand of the year. But if you move towards the holidays, that's the highest demand of the year. So if we take December and have one rate and one target, that's not going to work out. We need to have different strategy for the lower demand dates, and we need to have different strategy for higher demanded times. That includes holidays, events, that includes weekends, weekdays, even day of the week. So we really need to be granular, in order to identify and maximize the highest revenue and target the better pricing for each day. I think that's definitely kind of explains the key aspect there. And another point that for us is important is also the data. So we are looking forward-looking data, not only historicals. They all need to be combined together in order to get the best decision. So as we mentioned, we are in an environment right now is rapidly changing, and in order to track that, what happened last year might not be matter anymore. It might be in a completely different market environment. So in order to capture that change in environment quickly, we need to look at forward-looking data. We need to get insights, how the market is pacing, how that is actually moving towards into which direction, independent from last year. Obviously, that doesn't mean that we need to ignore last year. That's definitely still an important point, and we should definitely reference that because that's kind of a guide for us as well. But as I mentioned, it needs to be a combination of both, and leaning towards more forward-looking data is definitely one of the key points. Another point I would like to highlight is also nightly minimum strategies. So similar as pricing, I think that's another lever for us as revenue management to play with demand, whether we want to pull and push. With more restrictive nightly minimum strategy, with longer nightly minimum strategies, we can capture longer stays, right? But there's also flip side of it. We can also push demand away for the people who are looking for shorter stays as well. So there are times we can apply this, but there are times that we cannot be too restrictive, especially OTA algorithms are getting impacted with the more restrictive strategies. So we want to be careful on how do we target in our audience. That needs to be really determined at the market level, at the property level, because each has different dynamics. So we need to set those rules check-in, check-out restriction, the minimum requirements, those all needs to be actually taken into account and kind of adjusted diligently based on the demand and the supply. And as I mentioned, I think the most important part too is also we shouldn't have one blanket strategy. We need to acknowledge that each home and each market is individual and unique, and we need to keep that granular approach, and we need to treat them and define our strategies based on this uniqueness of each market and the dynamic of each property. So
I think it's really well said. I want to sort of highlight one point that you made in a little bit more color, which is this construct around forward-looking price points, because I think it's a really important one. With the influx of data that you now have access to, the question is less, can we get our hands on some data to make decisions, and more, how do you actually make sense of the data that's available to you and the many data points you could look at. And so you've got historicals and what the property or set of properties booked at last year. You've got, on a forward-looking basis, what has the property already secured reservations for from an occupancy and price point perspective. And then what we've done more recently is actually get very fine in terms of the way that we define comparable sets of 100 or more properties that behave with very similar characteristics based on the size of the home, the location, the amenities that are available, and even across markets, you can see very similar characteristics that you can draw inferences from, and really start to hone in on forward-looking real-time pricing in that market with the comparable homes to understand shifts in demand in real time. And so you're not waiting for a home to either get reservations or not get reservations before you're really acting on a daily basis in response to what we're seeing. And so that's a continuous process as we think about refining the data sets that we use. But I think we're in a period now, as really in many industries, I think we've gotten there, where you have a plethora of data. And the question is no longer how can we get more data? It's really how do we make sense of the data that we have, get really focused on the data points that actually matter, and give that to our teams to be able to action effectively and take the right lens on top of it, so that we're not just, to Emre's point, setting a blanket strategy and sticking with the same part of the market, but we're really actually being strategic about whether we want to price at the same price point as the rest of the market or slightly below, so that we can capture a reservation, or above because we feel that there's going to be more demand and we have an opportunity to actually improve our revenue take rate as a result.
Absolutely. I think incredible insights from the two of you guys, and just summing it up quickly for our audience, right? Revenue management has to go beyond just pricing, right? It has to support and be paired with other things like design, channel optimization, photos. We can't just focus purely on ADR or occupancy. It's got to be some kind of mix of the both into this metric that we call RevPAR, revenue per available room. You can't only look at historicals, especially with how crazy 2021 was, but that's just even one example. It's really forward-looking data that drives success. And also, as you guys saw, markets are different, right? Scottsdale is different from Coachella Valley, which is different from the Hudson Valley, and all of them require a different approach. So taking the subject a bit off revenue management for a second, because I think these are incredible takeaways that anyone can take something from and utilize in their own kind of day-to-day strategy of managing their business. What are some other ways that we see homes being able to optimize and stay ahead in the market?
Yeah, it's a good question. I'll share a couple thoughts, and then Emre, maybe I'll hand over to you to share some of yours. There's a couple that come to mind for me that we've talked about a little bit already today. The first is home differentiation, and this is a little bit of a catch-all, but in a market that is more competitive, the homes that are going to get bookings and really drive strong returns are the homes that stand out and are exciting, fun, interesting for folks to book. And so when you think about what the core components of that are, it's really about having a home that has the experiential amenities that guests are looking for when they're booking. If you're going to Scottsdale, you're looking for homes with a pool. If you're going to the Smoky Mountains in the winter, you're probably looking for homes with a hot tub. So how are you finding homes that have those, that have the game rooms, that have the little putting green that may not cost a lot of money to put in, but when you have a photo of that on your listing in the first view, it stands out when folks are looking. So that's a big one. The second that I think for me is very important, and it goes hand in hand with revenue management, we talked about it a little bit, is the marketing strategy and the reach that you have across the online travel agencies or OTAs. So we're always looking at how to expand our reach. We've got over 65 travel agencies that we list with, or booking websites we list with. Airbnb and VRBO or Vrbo are the two big ones. But we also have a direct website that does about 35-40% of our bookings, which is phenomenal traction for folks to get access to that are in our portfolio. And then there are a ton of websites that help extend our reach. And they may not drive a big percentage of our bookings, but they really help as we're looking to reach the right people at the right time to make sure that we drive bookings. And so we partner very closely across revenue management with marketing and listings and photos to make sure that we've got everything dialed in when we think about where we're meeting our guests. Emre, I'll hand over to you. You probably got a couple as well.
Yeah, no, thanks, Sam. Those are great points. And I think there's nothing that revenue management team loves more than unique homes with great photography. So that helps us. That helps us to actually drive higher rates, higher ADRs as we get unique and less competitive against the market. So other points that I think of is the reviews. I think that's one of the most important parts in all booking platforms such Airbnb, Vrbo, that properties has actually good reviews, 5-star reviews. That's really important. I actually just had a case study recently, one of our properties, we had 3 homes, they are 3 identical homes next to each other, and only difference in those properties were actually the ratings. One had a lower review, another one higher, and we have seen on these 3 homes really correlation between how the reviews and ratings are versus how much revenue we draw. So that's definitely important, and it helps us still get differentiated in the market. And another point that I wanna mention is the regulation. Especially over the last 6 months or 12 months, we have seen a lot of changes in regulatory environment. We gotta stay ahead of this. We gotta stay our positioning. Should be really understanding those changes and how that impacts the demand, how that impacts the overall marketing dynamics, and how that impacts the position of each listing. So being ahead of those regulatory environment is definitely one of the key points, as well as sometimes they might be limiting our strategies that we apply in revenue management. With some regulation has 90 minimum restrictions. Some of them has minimum reservations that we can get throughout the year. So yeah, that's one of the key points also we need to know and get ahead of the market.
Yeah, really well said. And to tie this together, I know we've got a backdrop slide here as well that helps show this, but I think on the call, we've got folks that are self-managing. We have some that are not in the space yet or don't own. We also have some that are working with local and national property managers. And I think while any one of those strategies can be effective, as the market gets more tight and competitive, I think the value of professional property management continues to go up. And on the backdrop of all of this, hopefully we've done a good job sharing some of our thinking, but there's a lot of complexity with respect to how you think about optimizing a vacation rental in a tight market. And I think working with a professional property manager that spends day in, day out, really getting into the data and understanding where price points are at, but also some of these other components around design and permitting and compliance and listings and developing the relationships with some of these online travel agencies. It all goes into a level of performance that I think stands out and can really help you improve returns. So that's another just tie-in I wanted to mention that I think brings this all together.
Absolutely. Well, guys, we are just at time right now. Thank the both of you for sharing all of your insights today. We do have some time set aside for Q&A for those of you that can't stay past the current time. Thank you so much for taking the time, and I hope that you had some great takeaways from this call. We are going to be sending a recording of this in the next 24 hours, and we're very excited about continuing the conversation with you and getting your feedback about what other topics you'd like to see us cover. You can direct any individual inquiries to this email above or Instagram if you want to do that. But let me get to some of these questions. We have one from Sandor. Sandor actually is an AvantStay owner, and his question is echoed by Lauren here. Sandor seems to be asking, how do we kind of think about the guests that we let book our properties, right? How do we consider security when it comes to, maximizing our revenue? Do we kind of let go of some sketchy people in exchange for occupancy? What are our thoughts around that?
Yeah, it's a really good question. The best way that I can describe this, particularly when you think about a national property management company like AvantStay and how we need to think about this, this is a repeated game. right? We can't optimize for one last minute booking that we're nervous about just to get some money in the door, because that may well translate into a party or an issue that we end up having to pay money to course correct from, that ends up being worse for us in the short term. But long term, that has impacts on reviews, on owner relations, on the way in which we're thinking about building our business. And so, for us, I think our interests are very well aligned. We take a few steps. The first is we have really a best in class across any other property management company that I've been able to research on this, way in which we're checking everyone's sort of license and information and running background checks before every stay, so we understand what we're getting into. And we do block stays in many cases. So that's a regular occurrence. The other is we're very careful about bookings that we think have high risk. And so we really avoid day before bookings, and we'd rather take the hit versus have a booking that's going to come in and likely be a one night last minute party. We also really are careful about any price points that we think might reflect a potential booking that's going to be something we need to be nervous about, and make sure we have the right level of support for it. And then during the stay, I think this is really where we stand out as well. We deploy IoT in every one of our homes so that our local area manager team can actually monitor everything down to the decibel level and the number of people in the home based on how many people are on the Wi-Fi. And so we really are understanding that information in real time. Ring cameras that have cameras at the door of every one of our homes so we can see what's going on and who's going in and out. And we can respond within 20, 30 minutes to anything that we see that's out of the ordinary. So it's really an approach that I think spans pre-stay, during stay, and ultimately serves the output that happens after. But hopefully that's a little bit of context about how we think about it. Security is paramount. It's absolutely paramount.
Perfect. And next question: how does AvantStay, what do we do to encourage and increase reviews?
Yeah, good question. So I think that the best way, and Emre, you may have some thoughts on this too, but the best way that I think about encouraging and increasing reviews is to create, pardon my French, a kick-ass guest experience. And so, first and foremost for us, and we've got, I literally am looking at reviews every day, all day, because I get notified every time a single review comes in across any one of our homes. We're maniacal about making sure we create a best-in-class guest experience. And that's part of, as you think about what we're building as a national property management company, we're also building a guest-facing brand, right? So we need to have best-in-class owner experience, best-in-class guest experience, which drives reviews and facilitates positive sort of owner perspective, because we're driving revenue and improving the performance of the home as we're doing it. But we're really focused on making sure that we have that come through. We do run campaigns as well afterwards to make sure that we're able to respond to anything that guests did bring up, and make sure they have a chance to leave us a review, both so that we can make sure that the reviews accurately reflect on each of the platforms, but also so that we can continue to improve. Much like anything, we're looking for that feedback so that we can continue to push that through to all of our teams, whether that's, Emre's team and revenue management, and thinking about how we can continue to improve, what data we might be able to pull in, or from a security perspective, anything that ended up happening that we need to make sure we take into account, or for our local operations teams who can change things about the home or tackle any repair and maintenance work that needs to be done. So all that's really impactful for us to be able to run a successful business.
That's great. Emre, I think this is a question for you. What are some preferred dynamic pricing tools that either we use or we could recommend to the audience?
Yeah, so I think this is a hard question. I can't tell one, especially, there are a lot of, obviously, operators in the industry who is doing a great job, such as Wheelhouse, pricing, data. There are a lot of tools and software supporting revenue management. But I think the challenge, lots of it, are doing a great job. In I would say still our revenue management team is the best tool, because I like the combination of data and art. What is the challenge with some of the pricing tools? Not all, but it's kind of missing that individual and subjective aspect of the human component. So that part is mostly missing in this, especially when it comes to more premium homes and more unique homes, like when they have actually unique feature that it doesn't translate into data. Like there's no way that there are two homes like right next to each other. One is ocean front, another behind, doesn't have ocean view. In the data, they are actually considered the same, but it's actually a completely different story from revenue and pricing perspective. So I think that's still, that's why I was referring like in the initial points, like the being actually like really granular and understanding each listing, each property is different is key, and for us to success to drive and maximize revenue.
Right on. I love that. Nothing beats the human aspect of looking at the property yourself.
Industry will get there. I think overall, like if you look at hotels, like definitely like it's been around, like hotel industry, like all the revenue management tools are strong. But when it comes to short-term rentals, like short-term rental revenue management is still new, fairly new, and it's evolving every day. And when we start to get access to more data, and definitely all the system, all the modeling is getting more and more sophisticated, which is going to help actually to all of us to optimize and better pricing through softwares.
Totally. Ken, a double-sided question for you. Number one, what maybe we don't have this answer right now, but what do we consider some of the top short-term rental markets going into 2023, and where do we plan on expanding in 2023?
Yeah, it's a great question. Both questions. So I will say is that as the last 12 to 18 months have played out, we've seen a little bit of a shift in terms of what I would classify as some of the top markets. And it also really depends on what you're optimizing for. So this can be a highly personal question. If you're looking for a second home that you're going to be able to use with your family, but that you can also rent out, that's a very different conversation from a market that's going to have top yields as a full-time investment property. What I will share is I think what we're seeing is a shift as the industry has grown and gotten institutionalized, and we've seen supply growth in sort of core markets, a shift to the best yields from an investment perspective really being in second tier, third tier cities and markets that are a little bit smaller, where there's a little bit more constraint on supply. And so having a short-term rental, there's really a good amount of pricing pressure from a demand perspective so that you can achieve returns. And those markets tend not to be as popular, not always, but tend not to be as popular from a full-time living perspective. And so when you see there's popularity from a demand perspective for purchasing and full-time residency, that also influences the dynamics of the rental market because it puts pressure on home prices. So as you're thinking about yields for short-term renting, you're typically not going to find the top yields anymore, although historically they have been there anymore in some of the tier one markets, right? So you're not looking in San Diego necessarily anymore to go buy a property that you're going to have top short-term rental revenue from, albeit San Diego is a very good market and there still are yields in that market. But a lot of the sort of tier 2, tier 3 destinations I think are great. And, I'm talking about places like, Asheville, North Carolina and things like that, where there's enough demand for folks to go visit, but we haven't seen the same build out and supply growth as you've seen in Scottsdale, in the Smoky Mountains, where I think, there's a little bit more pressure at this point in time.
It's great.
Is there a second part? I feel like there was a second part to that question that I was meant to answer.
Second part to our question is, where are we going to be expanding in 2022?
Yes. So it's a great question. And I saw someone put in the chat, when are we coming to Massanutten, Virginia? So as we think about our growth, I think we, over the last 5-6 years that AvantStay has been around, have really optimized for breadth over depth. And what I mean by that is we've scaled to 60 cities across the country, really focused on building a guest brand. And we've done a great job actually sort of hoisting flags in new places. I think as we think about what the next couple of years look like for us, we want to continue to expand. Our plan, I saw someone else had asked about international. Our plan is not in the near term, next 6 to 12 months. I don't necessarily want to speak beyond that because I think there's some exciting opportunities, but our plan is not to do a big push to go international. I think we see a ton of opportunity to continue growing within the US without having to deal with things like foreign exchange rates and new dynamics and cultures and things like that. There's a lot of room to build in the US. But I think from an expansion perspective for us, where our focus is more squarely at this point is going to be on expanding to adjacent markets that we're in. So, we're in North Lake Tahoe right now, expanding to South Lake Tahoe. We're in Scottsdale right now and have just started building out Sedona. I could see us expanding Sedona and considering Flagstaff. So it's those kinds of moves that I think we're going to be making in the next 6 to 12 months, dictated by the fact that the market is in a bit of an uncertain place. And I think from my perspective, I want to make sure we're doubling down on supporting our owners that we currently work with, on growing with the homes that owners want to bring on in those same markets where we can continue to improve and really optimize the service levels that we have for our owners. And as with everyone, being very thoughtful about the investments we make in additional growth. Not that we're not going to expand. I think our goal is probably to enter another 7 to 10 markets over the course of the next 12 months. But I think, that is definitely less on an annualized basis probably than we did the last couple of years by design. And I think we're going to continue to focus from a business perspective on growing in our existing markets where, again, there's better returns in terms of helping to continue to improve the service levels we have for our existing owners at the same time.
Perfect. Thanks for that answer, Kent. And being mindful of everyone's time, I think we have space for 2 more questions. For those of you that we didn't get to, we will reach out to you via email to answer those questions as best as possible. We have, I think, a big question that everyone on this call would like to know, and I'm not sure that there's an exact answer for it, but what do you think is going to happen to the market in 2023 for us owners? Is it going to be harder to get bookings? Is there going to be, higher or lower demand? What do you predict with your crystal ball, Emre?
I can start if you want, Emre, and then feel free to chime in, because I think I wish I had a crystal ball. So what I think is actually going to happen, I think interest rates over the course of the next 12 months are actually going to go down. I think we are at a point right now, and this is a little bit playing out in real time, but you've got jobs data that's starting to support that inflation is cooling, wage rises aren't happening at the same rate. I think the Fed is going to end up deciding that the pressure that we've put on the economy over the last 6-7 months is enough to curb what we're seeing from an inflationary perspective and start to put an emphasis back on making sure that the economy holds. And so I think if we see that, what it's going to do is I think it's going to breathe a little bit more life into the transaction side of the real estate space, ease on some of the supply growth that we've seen. I think we're going to continue to see continued institutionalization and investment into the STR space. That's going to have some level of pressure on supply, but we're going to see it primarily coming from more institutional investors, given that we have the situation that we do from an interest rate perspective, that even if they start to come down a little bit, they're still going to be in the 5 to 6 range, which is still well above where they were a year ago. So what I think all that's going to do, though, is it's going to give a little bit more confidence to consumers, and we're going to see demand continue to improve, and I think, again, start to outstrip supply growth on the backs of everything I just talked about. And so we're seeing early signs of this now, that January has been a very strong booking month with respect to the portfolio that we have. I think we're seeing the early signs that this summer and the high season for many of our markets is going to be extremely strong. We're seeing that there's a return to pre-COVID seasonality structures. So a lot more folks are back in person at work. Kids are back in school in person. That has an influence on when folks are taking trips, but we're actually seeing that has not tremendously impacted the demand for travel, and that there still is pent-up demand to go take vacations and pent-up savings to support it. And so I think if we see things play out as I expect, we're going to see that actually demand will continue to grow. Supply will right size and normalize, continue to grow as well, but at a slower pace. and we'll see a great opportunity for continued returns. Now, we'll see what shakes out from an interest rate perspective moving forward, but that would be my gut, is that we actually have a great opportunity this year, and it just speaks to the competitive market dynamics that we're seeing play out. I think that as the market grows, professionalization and having the right approach is going to be paramount, but there's still going to be a lot of opportunity for folks to be successful. Emre, I don't know if you agree or have any different perspective, but that's my quick take.
No, that's great. I mean, pretty much aligned with you. And I think, as you mentioned, that's a great indicator. Like the job data is still strong. And as people continue working, they're going to need to take vacation. And that means that it's going to still translate like the demand on the vacation and the rentals. So definitely it's a great indicator. And also, and I think back to my previous answer, like in the presentation, also like that depends on the market too. So we might have completely different answer in one market versus another. So that's, I guess, like it's really important where we need to see like overall trend, but also like understand the market level dynamics as well.
Perfect. Yep. The last question that we'll take today, adjacent, and I'm going to slightly change up the question. So Charles is asking, how much has revenue per unit changed in Palm Springs due to the recent doubling of supply? But I guess we can expand this question to, like, in general, how have we seen revenue per unit changed in, the market in general? Or is there, like that?
So I don't have exact data in front of me for Palm Springs specific, so I don't want to give any wrong number. But overall, I guess like Palm Springs, Coachella Valley, Palm Springs, like those are the markets like we have seen immense supply growth, and we're seeing like across the market, occupancy levels are kind of like getting stressed and pressured with the supply growth. So it's a little bit like, as we previously mentioned, like we still going to be targeting like to capture like highest RevPAR as possible, maximize revenue, and that's going to be a little bit push and play game with the ADR and occupancy relation, right? Like we, I guess the goal, like it's kind of like getting ahead of the market in terms of like the supply growth and kind of like try to maintain the performance.
Yeah, I think that makes sense. My take is I think we're seeing that there is, for obvious reasons, pressure in certain markets, to Emre's point, on how performance looks because of what we've seen from supply growth. What I will also say, though, too, to add is that I think for homes that are well positioned, where there's strong design, amenities that make sense, homes that are are well appointed, that have pools in Scottsdale are still performing, right? And I think the counterbalance to what we've seen in some of the low season is that Scottsdale high season is actually looking really strong. And, of course, that market has the Waste Management Tournament and the Super Bowl. So it's buoyed by, some February events that are coming. But I think we're going to see a very strong high season there. So, there's still a lot of reason to be bullish about RevPAR, revenue per unit, continuing to grow in many of these markets. And at minimum, I think stabilize would probably be how I'd reflect it, because you are seeing some of the seasonality shifts. And so if you see a stabilization year, you're still, when you zoom out and look at the last 3-4 years, seeing tremendous year-over-year growth. And I think that in some of our markets, we'll start to see probably a stabilization 2022 to 23 that reflects what we've seen coming out of COVID, changes in sort of seasonality and demand patterns. And then, as I talked about, this sort of ties into my internal perspective, of course, not disclaimer, not AvantStay's point of view, but my point of view, that we are going to see interest rates sort of start to actually normalize, dip back down, and that you'll start to see actually the continued growth in terms of returns, and that this will come back probably again. And I don't think we're going to see tremendous downward pressure. I think if anything, it's probably more of a stabilization year over year into a more consistent annual growth pattern, instead of some of the crazy year over year growth numbers that we've seen over the last 2-3 years.
That's a great point, actually, Ken. Like, it's definitely, we're seeing more of the signs of the stabilization. Like, we have been going through like all volatile years, like from 2020 to 2021, ups and downs. And now, like, we're actually like coming back to the seasonal norms, pre-pandemic levels, where like what we see, okay, shoulder season back to like start of how it used to be pre-pandemic. In a lot of markets, like that relation seasonality component completely changed, like, but now we're seeing back to normal, like back to pre-pandemic levels in terms of seasonality aspect, as you mentioned, and also like the how that plays out, the continuous growth and as a correction after the all volatile years.
Perfect. Thank you so much for your answers to the questions, guys, and thank you to the audience for giving us such thoughtful and varied questions to go through. Again, just a reminder, we will be sending a recording of this in the next 24 hours. We would love to continue the conversation with you, whether you be an existing owner, someone that doesn't own, or someone working with another company. With that, another big thank you, and wish everyone a happy and successful 2023. We'll see you next time.
Echo that. Thanks, everyone.
Thank you.